Good afternoon, Scott Redler of T3Live. Welcome to today's recap. So we came in today, futures were up a little bit. People, I think a lot of guys were confused, like, wow, IBM's down $8, $9, Intel's down 80, 90 cents. We just had two strong days. Why would the futures not be down a little bit? But the market's the market. There's nothing you can do about it. I know I came in with a little short in the brain, trying to catch a cute short, thinking that maybe some things are a bit overbought. Maybe we digest a little bit, and lo and behold, the indices went out strong again. So with all that said, it's really important to know, your time frame on how you want to enter some of these things. So as tactically as we've been, getting out Jobs Friday and then trying to make some money on both sides of the trade, which worked pretty well. It hurts a little bit when you try and get back in on, just say, like a Monday, when it made sense to try some longs after holding the 50-day and then maybe selling a little too quickly on a Tuesday to then start reversing late Tuesday afternoon for then what wound up being a poor trade, instead of getting back into quality stocks, getting back into situations that can make new highs, getting back into a portfolio approach. So throughout the course of this year, there's about 3 times I feel like I was comfortable enough to sit in multiple positions with a portfolio approach, and I do feel like we're back in that time period. And unfortunately, I didn't switch gears quick enough in order to get back into that groove. So hopefully, I will find that. So I'm going to go through some of the action and we'll see what's going on here. You look at the chart of the S&P, you will see that, look at it, we're right back near this small little downtrend that's been put in place, since the highs. And it looks as if we're ready to bust loose. We talked tactically how we broke this accelerated trend line right here. So, this was one sell signal, this was sell signal number 2. And then, we tried to position right here, but nobody knew that you'd have a 3-day powerful bounce right back to, the upper area of this, I would say this is some type of channel. So it negated this, this resistance, and really what it turned into, if you look back in hindsight here, all this really was a retest of this prior breakout. And, we talk about the 5 patterns that we've been following and how this was, not the most clear-cut cup and handle pattern, but, if you look right here, here's your cup and handle, okay, with 1422 as the breakout, and because here's 1422, there's 1424, so let's show you this with a little, just a little closer up here. And again, right in this area, we were talking about a calculated move to 1580. How do you get that calculated move? What you do is you take the depth of the cup, which went all the way down to just say about 1266, I think. What was the low there? It was 1260. So just even say, 1260, so 40 points. So to get to 1420, what do you have? 140 handles, around. And then you take those 140 handles, you throw that on top of the breakout price of 1420, and you get like 1560 to 1580 all the way up. So, if you break it down time frame analysis wise, from the lows to that little overbought reading of plus 60 for this digestion process, all we really did is retest a 50-day retest where we broke out from the handle. So if you didn't chase this area, you were able to buy back there. So now, lo and behold, here you are. You got to figure out what you're trying to do here. And it does seem as if one thing you don't want to do is you don't want to just fight this short and look for some type of cute trade because, you feel like the market owes you. That's what I kind of did today. I was a little upset that I was long this day. I sold halfway into here and started to short there, thinking that, it would take some time. But if you look here, in 3 days, we're right back to the top end of the channel with what took 1, 2, 3, 4, 5, 6 days to the downside. So we took back this whole range in half the time. So that shows you some power there. Then you want to look a little bit closer. Look at the XHB. You look at the home builders right back to the top. Home builders continue to lead the way, continue to show you that pullbacks have been viable. You look at Lennar, best of breed. Even though it came off the highs a little bit, still at new highs of the year. I think some guys were talking about KBH. Look at that, new highs. So it goes to show you that, if you look towards these things to see if they can continue to help give you clues on whether or not a bounce is feeble or a bounce is going to continue, there you go. And even better than that, the banks have really been unbelievable. Here is finally a clean breakout of this wedge here. Okay, we've talked about the banks. I know in August I was on, I think it was Bloomberg, talking about how the fourth quarter would be a great setup to be long the banks for an end of the year move. And it started a little bit early, but it still has some room. If you guys remember, on Monday, so to speak, Friday, JP Morgan, Wells Fargo came out with earnings after a big move, and the market wasn't ready for it. And plus, the market wasn't ready to rally yet. We were just testing the 50-day. They wanted to shake things up a little bit more, and then it was very easy to sell JP Morgan and Wells Fargo that day. So to take note of how things changed, on Monday, Citigroup came out, and they tried selling it down, and they couldn't. And when they couldn't sell it down and it rallied, that's what ignited the move in Citigroup as well as some of the other banks, which helped fuel the bounce. And then on Tuesday, when Panda came out and resigned, everyone was just shorting it. Oh, it has to go down, it has to go down. And then PS went from down 90 cents to up, up considerably. And then today continued on the move. Look at Citigroup. Citigroup, powerful. Wow. That's why, you want to have your stops. And I think I tried it for the first day today, trying to be shorted, thinking, okay, you know what? Here's what was a nice long. This was a nice long. Everyone was trying to short it on the day of earnings, but closing the highs. Here, people are selling it because Panda left, closing the highs, and then today, closing the highs. You don't want to be fighting something like this, okay? Because you are going to get burned. Even though maybe tomorrow's the day you get some kind of cute setup, but until you see a topping tail or whatever, it's not even worth it. I think this move is going to be that much more powerful, and it's going to continue. Talked about how after a few days, JP Morgan will be buyable, that it wasn't a big deal on their earnings, it just probably needed time. That was right here. Okay, this was the earnings day they tried to sell it, boom, yawned, and now look at it. All right, Goldman Sachs also, not that big of a deal yesterday that it couldn't break out and go because everyone's looking at it. So when everyone's looking at it, they try and just, get everyone to look away, and then today was a nice day, and I bet you in the coming sessions, this is going to be a new highs. You go to your weekly chart of Goldman Sachs, and you'll see that you have a little pivot point right here of about 128.72, and there's no reason why it can't hit 131 and change at some particular point. So with all that said, keep in mind Bank of America. Bank of America wasn't able to rally today. Okay, big deal. Look at this weekly chart. Stayed in check. Looks very, very strong. This was one of the strategies we had in August also for a call spread. Fully got valued, and now I think you can do another one. You want to do one through January? Buy the 10s, sell the 12s, and I think that at some point, it gets to that 12, and you could be in there for what could be, another 20% or 25% in the stock, or just buy the stock and let it work out. But I wouldn't say this is like your day trade where you sit in it, but if you're holding multiple positions, this Bank of America to me looks like, it's going to break out. Okay, so I'm going to keep my eyes on it, and every time it's had a nice move, it trades and you can make money there. I remember this one was the best one of the year right here earlier in the first quarter. Look at this tight pattern, and that blasted off to $10. So I think that Bank of America loves tight patterns, and here we are again getting very tight. So really the buy here is between 960 and 980. So that's the spot. I would say be in tier 1 if it starts to go. Make sure you're talking about it on the VTF, because I think that the first stop will be post $10. And then we talk about what happens with laggard trades. When does money rotate into other sectors? And I think off the charts on Tuesday, we just showed the tight pattern of the OAHs, or at least I spoke about it a few times. Then today, it looked like real money went there. OAHs, which is trading, was in this tight little pattern all the way down, in the lower end of the range. It basically had a nice bar here on Monday to wake up, gave you a little follow through, and then it continued. And it looked pretty, not powerful, but it looks like it's back in play. What helped there was inline earnings from Halliburton. So on inline earnings, this thing had a wide range, huge potent day. So it shows you that there is some pent up demand for some of these drillers. So Halliburton had a nice move. Schlumberger, on its way, looking good. A lot to do there. And then you go to some of the industrials. The XLI looks like gaining some steam, about to break above a decent resistance. Get rid of that tail over there. This group is getting stronger, okay, and trending higher. And I guess I gave away the 50-day quick, but bounced back real strong there. And then today, at the end of the day, we're having some fun, just looking for things to do for people that are day trading or looking for, day one type of things. And people like, Red Dog, what's a day one? Day one is like some crappy stock, or I don't want to call you a stock a crappy stock, but a stock that's a laggard stock, very tight, heavily shorted, and wakes up. Okay, we saw that quickly. Go to Netflix. I think guys made cash flow today. People saying, can I stay with Netflix? Usually after a day one, it continues. And here was your day one after, a pullback. This was the first day one pullback with the downgrade, continued. I'll put a volume in on these because volume is important, especially on these little lower tier stocks. Volume is always important, but not a heavy volume today, but it was something to do. GMCR gave you a day one today. Not heavy volume, but it was tight. I know some guys had made some money there, and typically with GMCR, it gives you more than a day. So like last time I woke up right here, look at these 3 days. So it's something, if you need something on the radar on a laggard, not a leader type stock. Some guys were talking about DEC. Look at that. DEC had its first day of decent volume, broke above this range. Some guys might say, I'm going to take it home just for treasures for trash trade, because look how trashy this stock has been. It's been absolutely annihilated. So sometimes on volume, one day like this, could lead to a few more. So it's something, if you trade these type of stocks, put it on the radar. Guys also talked about MCP, another like trash for treasures trade. Sometimes we have some success with this one. Here you go. It woke up a little bit today. So if you had to get in there, maybe today was your day one. Here's some volume. So, there are some other type of one-off type trades. And then in the high beta land, on what was it, Monday, we had a Red Dog reversal in Amazon, in Google, one in Apple. And some of them took a few days to materialize and get higher prices. So a lot of guys say, how do you approach it? Depends. If you're an active trader, day and a half usually is something that makes sense and is profitable. Sometimes you take a certain portion for the day and a half and then say, I'm just going to give it to the lows of that day that it was initiated, because that's a strategy, because I'm a swing trader. So if you're a swing trader, you give it more time. So if you go real quickly to Amazon first, Amazon that got really beat up, starting from here, if you got stopped out, or here, gave you, a Red Dog reversal, tweeted about it, talked about it, guys in the chat room were all over it. Here is your Red Dog reversal when it traded through this support. It came from 260 all the way down to 240, down 20 points, so it made sense to try. The low here, just say, was 241.89. Came back above it, stopped some people out. That was a nice actionable trade on Monday. Okay, if you took it for a day and a half as an active trader, you didn't really get paid the following day. But if you said, okay, I'm going to sell some and hold some and give it to the lows here, because that's the real strategy, I'm a swing trader, you then got paid, and you've been sitting in this thing from about 241 and closed at 247. You made 6 points so far, in something that gave you relatively no pain. Not bad. So it all depends on how you want to trade it. Or you traded it for cash flow, got out of it, and you said, okay, I'm going to wait to see a sign here. And then maybe you got involved quickly, if you're quick enough, if you're in front of your keyboard, when it crossed above this area. Google, same type of thing. Remember, we made money short and long on what's it called, Monday. You look here at this type of trade. This was also a Red Dog type reversal where you had a move from the highs here. Okay, this is when it kind of failed and changed a little complexion, gave you a 3-day short. And then here is where it traded through this 238, which was a very key level, 238.29. Went as low as, 738.29. Here went as low as 730.70. So with that said, some of us made quick money short, and some people switched. And then you had a nice trade, right? From 730, from 740 points to the downside. Why not? So your entry was when it recrossed 738.29, so you had $8 in risk, which is a lot of risk, but for Google, not really a big percentage. So if you stayed with it and said, I'm going to give it to the lows of this day, because that's the true formula or true strategy, maybe you got a little shaken up yesterday, but it never violated the stop. So it was a swing trading on in front of your computer, and you put a stop in at Monday's low. You know what? Didn't get stopped out on Tuesday. If you were a day trader and just got flat, you waited, you bought a dip, and then maybe when it crossed above the prior day's high of 743 and got in then. But all in all, if you were in it for the Red Dog reversal, you're just sitting there. So if you put it on here back at 738 and said, I'm going to risk $7 or so, You now close at 755 and you made for yourself, what is that, 38, 48, almost 17 points. And now you're right back here, and you're probably saying to yourself, what do I have to do now? Because Thursday's earnings, but you don't have to worry about it Monday, Tuesday, Wednesday. So with that said, that's how you use some tactics as an active trader. That's how you use some tactics as a swing trader. And as a macro investor, it's a different story. We'll talk about earnings when we get closer to that. But all in all, nice little strategy to buy a dip, calculated for what could have been a good active trade, another good active trade, or just a good swing trade hold if you stayed there with it. So all in all, the market's rewarding guys on every different time frame for those who have their, the tool belt sharpened and who are trying to be precise. And then it's also rewarding those macro investors that yawned and said, you know what, I'm staying with the positions that I like. Market's up 16, 70% on the S&P. All we did is pull back 3% and test a 50-day. I don't care. I'm just sitting. You guys are fine also. And then those who said, okay, I'm going to try and be cute and time it. I've been holding multiple positions. I'm going to get out, but get back in at the 50-day. Did you really do that? Or did you get in on Monday? Or, did you be able to get back involved? And I know for me, I haven't been able to put on my portfolio approach the way I was holding in August into September and the way I was holding the first quarter. I went to tactical and made some money, but could have made more money if I switched gears quicker. So at this point, I'm going to try and figure out how I could comfortably get back into positions that I could like and stay with. And during earnings season, it's a little tougher because you do have some things out there that could hit you like a ball and chain, or hit you like I don't know, or slap you around a little bit. Today we talked about IBM. I gave you a level. I said if it could hold this 202, there's a chance that they could bring it back up or whatnot. It didn't. So it's on its way to the 100-day here. This stock to me will be in the penalty box for a while now and probably just an avoid. Talked before saying gun to head I would be short it just for the mere fact that of the exposure to Europe, the exposure to the public sector, the amount that was priced into it, whatever. Intel was treated a little differently, a little bit off the lows, on some big volume. So I would say that there is a small chance with this huge volume, the way it turned around. If you did get long today, use this as your stop. It might get some kind of oversold bounce and act a little bit better. It's been acting like crap since August. So here, first type of move perhaps, but this shouldn't be just your only position, one of your multiples if that's what you do or if you have a fund. This was very impressive, this takeover. Pow, look at that. This is real. That's a big premium. So there was some attention in some of the semis that maybe there is some unlocked value there. So whatever, we'll play that by ear. So all in all, again, you just got to figure out where you live, what time frame you want to trade on, what type of risk do you want to have, and just once you figure that out, and then you fine-tune your tactics and your tier system and your approach. There's a lot of money out there. Equities are far from dead, and I just think it's a matter of time before we make new highs. And then again, no reason why 2013 we can't be seeing 1550 or higher, and then I do stand behind my 2017 prediction of 1700 plus, not the bearish side of 1,000. So get a plan, long-term, intermediate, and short-term, and stick with it, tweak it, work on it, and you'll make some progress. Have a great night.
Hi, I'm Sean Hendelman of T3Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.